forward-looking inflation profile is quite important. RBNZ, of course, the New Zealand setup is quite different in terms of the wage and inflation risk. In India's case, I think the second-round effects actually have not been much at all. Wages are contained, inflation expectations are coming down. And as I said, one-year forward inflation, RBI is projecting at 5.6. We think it'll end up being closer to 5. So if you look at the balance of risk to inflation is balanced, but growth is significantly to the downside now.
So in terms of the March numbers coming up in India, do you think we're going to get back inside the target range for that print, below the 6%?
Yes, absolutely. So based on the numbers we already have for the month of March, headline inflation should be getting back within 6. Our forecast right now, both for headline and core, is in the 5.5% to 6% range. But importantly, going forward between April and March of 2024, we think inflation will be closer to 5 rather than even greater than 5.5%. And the other point is, it's not just base effects. Sequentially, we are seeing initial signs that momentum is easing off on core. So I think the key risk to monitor for India is food and monsoon-related risks. But other than that, I think things are getting back in check, and the worst of inflation is behind us.
And I just want to circle back to the point you made about oil prices. They are working with the assumption of $95 to a barrel. We've had two guests on the show today talk about 120, 140 respectively on oil. Is India prepared for that? Because I'd reckon that they would cry foul if things were to go higher for longer in the oil market. So do you think till 95 they are insulated?
I think we are insulated. Of course, the domestic fuel prices have not been increased since middle of last year. And therefore, effectively, even though RBI is assuming a $95, the sensitivity to domestic fuel prices is less. But as a central bank, you have to work with both risk scenarios. You have to work with as you said, 120, but potentially also a risk scenario where it could be even lower than where we are today. So I think at $95, they have broadly built in the cushion at this stage. But the response right now cannot be to an extreme assumption on oil prices.